Hello, all, everyone. Um, Welcome to Perth Dialogues. I'm so pleased to have Dillon Kanbi with us today. He's an Australian professional specializing in research, investments, and acquisitions. He has a background in economics and finance and has worked in roles related to investment leadership at companies such as Tatarang and 58, which are associated with large scale property and investment projects. Welcome, Dillon. Thank you for doing this.
Sure. Happy to be here and discuss any topics that would be of interest to your listeners.
I think I was very interested in talking to you since we had a chat on the concept of home ownership. I've been discussing this with a few other people, and I was very interested in your views that we discussed. So I thought other people will be interested in that as well. Um, just to start with, there's a lot of talks of there's a housing affordability crisis or housing crisis in Australia. When we say housing crisis, what do we actually mean by it?
Sure. So I think the word crisis means different things to different people. Generally, the word comes about when prices are increasing quite quickly as they have been over the past few years. So we've seen both house prices increase quite quickly and rent prices increase quite quickly as well. And I suppose it's times like that where the word crisis is brought around. At times when there is price pressures on the rental front or the sale price front, it's generally brought by an imbalance between demand and supply. And I suppose that's where the crisis element can be more seen. So generally, what you tend to see is periods of stronger demand at a time when supply can't respond as quickly to demand. So generally, demand for property is can move a lot more quicker than the pace supply can. It takes a little while to build a new home. Um, Whereas the impetus for somebody to purchase a new property or require accommodation can change quite quickly. It could be a new migrant family moving in overnight, and that's one more household needed, or interest rates falling quite substantially, or incomes increasing quite substantially over a short period of time, and that encourages people to buy a larger property or upgrade their rental property. So the demand side moves a lot quicker than the supply side does, and I suppose it's that imbalance that creates a crisis. But that said, a crisis could be also on the flip side. So I think a crisis describes the extreme circumstances through any market. At the moment, it's demand outpacing supply and driving it at the price increases point of view. But you could quite easily use that word in quite the opposite market where I suppose there's significant supply and not enough demand and prices are perhaps falling. So it could apply to either end of that spectrum, but generally it's to use to describe imbalances in the market between demand and supply where one is higher or lower than the other.
Right. So the next thing, and coming from the same question of housing affordability, is I can't afford a house, basically. And to my mind, when I see the market, I see that every stakeholder involved in that market benefits when the prices go up. Be it the state government, which benefits from higher stamp duties, the banks, which get higher loan ticket rates, the brokers, real estate, mortgage brokers, they get higher commissions, local governments get higher, rates and everything. So who actually wants to reduce the housing prices? Everyone potentially or theoretically wants higher prices.
Yep, definitely agree. So I suppose the narrative is around affordability and perhaps a certain cohort wanting lower prices. It's generally the cohort that doesn't own property, but most Australians do own their property. So it's something like 60 or 70% of Australians own their property either outright or with a mortgage, and ultimately those people wouldn't want to see their asset values decrease. So generally, most people do not want. Most individual households don't want cheaper property, and then, like you mentioned, other stakeholders such as those involved in transacting real estate, a higher nominal contract price would attract higher commission. State governments do generate a large volume of their of the taxation revenue from taxes. So generally, most more people tend to benefit from higher house prices than don't. But on the flip side, there are some people, perhaps generally younger people, who haven't yet established their careers and so forth, and don't have that financial backing to enter the market just yet. Those would obviously would advocate for cheaper prices.
Um, Another question around housing affordability is uh, the charges that it takes to build that house. And in the recent years, with big government construction projects like Metronet in WA, there's big projects or what is called Big Build in Victoria. They have taken resources or construction resources away from housing market to the infrastructure market, where resources go away, material go away, uh, labor go away. So obviously the housing market people are resources are come and the prices are higher. What I want to know is when all this government is actually pulling the resources away into infrastructure projects, how can the housing industry cope with that sudden change? They can't train all these people so fast.
Sure. So, I mean, look, as with any market, there are components of it, and the supply of labor is a big component of housing construction costs. When there is stimulus to other types of construction other than housing, it does shift that pool of available labor, and then obviously that does impact the price of or the cost of building a new home. But at the same time, I suppose the other element to think about is governments generally enact stimulus when the economy needs it, or at least when the government believes that the economy needs that stimulus. And the reason they do it is to promote employment and a stronger labour market and keep households from allowing households to earn more income, essentially. So if we think back to the previous period when the last stimulus was announced around that pandemic time, there was a period where there was a real risk where a lot of people could have lost their jobs. Now it didn't eventuate that way, but the reason these policies were enacted was to create some extra activity in the economy and therefore keep people employed. So I suppose the government's trail of thought was as simple as trying to support the labour market, and that's why that stimulus did occur. At the same time, they also did stimulate the housing market as well. So they had, I suppose, they were stimulating the infrastructure side of activity, but they were also stimulating the new housing building construction side. So that created a double stimulus where generally a lot of trades in the construction industry can switch between infrastructure building and residential building, and that sort of created a pull for the limited pool of workers, and that's created some of the situation we're seeing right now. But I don't think it's fully fair to blame governments for enacting stimulus to try and support jobs. I think there was merit behind that, and it was just a little bit of trying to balance the knowns with the unknowns. But the train of thought behind that was certainly robust. It was just incidental that it was pulling away trades from a stimulated housing construction market to also a stimulated infrastructure building backdrop as well.
Another aspect of the same stimulus is that when the Liberal government was there and during the COVID period, I think they pumped in around $92 billion into the economy. That's a figure which is floating around. After that, when the Labour government came in, the figure ranges from $124 billion extra to up to, I think, $350 billion. Obviously, when all that money is pumping into the economy, inflation will rise, which means the RB has to increase the interest rates. So, obviously, which means I've seen a figure somewhere that the loan servicing amount that you need out of your disposable income has risen from around 29% to 45%, where the mortgage stress is calculated at 30%. If you are paying more than 30%, you are at stress. People are at stress. And again, it goes back to like how much money the government is pumping into the economy. So, do you think reducing that government spending, not just in infrastructure, but other areas, will benefit reducing the housing costs?
So So to answer your question, again, inflation is a story of demand and supply. Government spending does have an influence on some of that demand coming through, but generally at a broader market level, it's not the only lever. The other thing to bear in mind is inflation is somewhat of a yesterday story, where inflation did peak just shy of that 8% in Australia, but now it's come down quite substantially. So the latest print, I think, was 2.1% year on year for Australia, which is actually at the lower band of the RBA's 2 to 3% target range. You are right that there was a period of high inflation, and some of that might have been contributed to the higher level of spending that came out of government and would have exacerbated the extreme levels we saw of inflation. But those flow-on impacts have already impacted prices, and now we're not seeing those impacts or put price pressures on to the same extent as they were. So the narrative in terms of the forward spending. It is probably somewhat changed. The other thing to bear in mind is some of these construction projects that the government has undertaken, for example, infrastructure, they are large one-off construction spends. But once they've completed that spend, whilst there's decrease and no longer continuing outgoing from the government spending point of view, the public does continue to benefit from the usage of those infrastructure projects for a long time to come. So it's really a case of those projects were something that the public did need and were at some point going to happen. I suppose the time that they happened was when there was a bit of uncertainty around the pandemic. It made sense to pull the trigger on them, and now that they are completing, that will be less spending that the government's pumping through to the economy. So that will reduce some of that, and we've already started to see that with inflation trending lower, and then also households aren't as keen to go on holidays as they were perhaps 2 years ago after being locked down for a little while. So that's also easing the demand side. So from an inflation point of view, demand seems to be normalizing, and at the same time, supply is also normalizing, where some of those bottlenecks we previously saw are being worked through. Um, Production methods are being rejigged to be more efficient, and those two in balance are leading to inflation being lower. So inflation is now well within the RBA's target band, and the RBA is expecting a slight uptick back to around 3%, but nothing like the 7 or 8% we earlier saw. And then the other thing to bear in mind is before the pandemic, there was an extended period of inflation being below the RBA's target band. We saw inflation with a 1% in front of it for quite a long period as well. Whilst the excessive inflation periods we saw were not ideal, period of inflation being at the higher end of the RBA's target band will average out over that longer period as well. But the short view is I don't think inflation is as concerning as it was 18 months ago.
Right, right, right. Uh, Staying with the government interventions, there's a graph, a very popular graph, which shows that the construction of social housing by the government has been falling for the last 30 years, since around 1996, 95. That's just been falling. But if you see the interventions that the government does, it's mostly from the demand side. We'll give you $50,000 to buy a new house. We'll give you this. We'll give you this, which is just adding to the demand. The problem is on the supply side. What can the government do actually to solve this? Should it stop with the
So
demand side interventions and actually concentrate on the supply side?
um, not necessarily, and I would also suggest that I don't think the government is not addressing the supply side. One of the key things that the government has in place at the national level is negative gearing. So I'll just take a step back and say, look, um, if the government was to engage in public housing, it would need money to fund those housing projects, which in short would be taxation, right? Um, so if the government wants to build more public housing, it will need to spend some of its taxation revenue to do that. On the flip side, negative gearing is a concept where it transfers the public housing component of housing supply through to the private sector by offering investors a tax advantage for providing housing essentially it's creating new housing stock. So that is an indirect way the government is still facilitating housing supply. It's just not directly involved in the creation of that supply, and it's shifting that towards the private sector. And the private sector is generally more efficient at allocating capital. So yeah, so by allowing negative gearing to be there, it's essentially creating housing that the government otherwise, essentially creating housing supply that the government doesn't need to. So it just shifts that along to the investors who want to supply housing. So it's a case of essentially taxing all of Australia to build public housing, or allowing some investors who want exposure to property to create that housing via the private sector, but then get the tax benefit of doing so. So net in net, that is a way that the government policies do allow to create new housing supply. It's just been a shift, I suppose, to private sector taking a lead on housing supply, and it's not necessarily a case of public housing versus private housing. It's a case of total housing, and the private sector is generally quite good at allocating capital in an efficient market.
So, as we were talking about the negative gearing, there's a big push from activists and commentators and social organizations to get rid of negative gearing and capital gains from the housing market. How will the market react to such drastic changes, especially when these tax breaks helps the keep the private rental values lower than the open market?
Sure. So I think you answered part of that question with your own question when you alluded to the fact that those tax breaks help investors finance investment properties. So if we take a look at what rental values are right now across most capital cities, whilst rents have increased a fair bit from where they were a few years ago, driven by demand, they still do not cover the holding cost of property. So generally, interest rates are in that 5 or 6% mark at the moment for a mortgage. So an investor has to service buying a property at that cost of capital. At the same time, the owner of a property, generally the investor, is liable for all maintenance on that property, and then other charges that a tenant isn't, such as the water connection, council rates, so forth. So they all add to the cost of providing housing, if you're an investor. The rental income from those properties generally don't cover those expenses. So that in itself it isn't attractive for most investors. So if the rental income isn't a strong attractiveness, then investors wouldn't be providing housing to the same extent as they do right now. The reason that investors are able to provide housing to the market is because there are incentives such as negative gearing that help offset some of those costs associated with providing housing. The whole concept of negative gearing means an investor is taking a loss from holding that property, and therefore can claim negative gearing. So the short answer is, from an economic point of view, for any year an investor claims negative gearing, they made an income loss by owning that property. So without negative gearing, fewer people will be inclined to invest in property, because they would have to absorb the entirety of that loss for providing housing. So that in itself would damage the pool of investors wanting to provide housing. And then we also saw that a few elections ago, where the Labour Party did propose getting rid of negative gearing. That election outcome would have largely been influenced by that policy, and Australia essentially voted, and the verdict was out on that. And then earlier, based on our conversation, we also touched on the fact that negative gearing is something that transfers the owners from the government to provide housing back to the private sector, and that mechanism means that not every Australian taxpayer has to fund public housing, but investors can choose, if they want to provide housing and take advantage of negative gearing, they can do so. So yeah, short answer, I believe negative gearing is something that helps support the supply of properties we have available for rent in the country.
Uh, is it the same for the capital gains tax as well, or that should be treated differently?
So I'm not a policy taxation expert, and obviously any proposed policy changes would each have to be assessed on their own merits. But as I touched on, negative gearing in property exists because there's a loss to investors for owning property. Nobody knowingly and willingly makes an investment action to take on a loss. The reason prospective investors do is they can take a loss in the short term for hopes for anticipated capital gains in the longer term, and that is part of the returns mechanism that attracts investors into the market to provide housing for those who don't want to or cannot afford to purchase and choose to rent instead. So yeah, short answer,
Right.
I don't really have
Uh,
any comment on that, but the policy would have to be assessed on its merits. And if it makes sense, yes, I'll be supportive of it. But generally, the taxation setting at the moment does seem to be working.
Now, talking about, we talked about the cost of building that house or a new house by an investment person. I was reading about the deregulation of the financial industry, where the interest rates just collapsed and it was so low, coupled with dual housing households, dual income households. So you see, there's double money coming in into a household. The interest rates are low, which means there's more buying capacity in the people, which will obviously increase the housing pricing. Is there something we can do that we can separate? There is a bit of a separation between primary owner interest rates and investment interest rates. Can we make them a bit too far that to sort this out, or just leave the financial market deregulated as it is?
Um, Again, so look, markets are generally quite efficient at finding pricing based on where the demand supply is, and financial institutions that lend out this money have certain risk appetites and they set interest rates accordingly. Um, my understanding is those systems do work. When you said sort out, what did you mean by that? Did you mean to make it more in favor of an investor or an owner occupier? Is that what you were alluding to?
Yep. What I read through was that initially, after the Second World War, there was a huge push towards primary ownership of the house. So the interest rates were just too high, and no one will take those kind of interest rates to buy, build into and invest. When the markets were deregulated, the market found a place where the interest rates are too low, which means more people can borrow. And then the new phenomena came in, which is dual income households. So I can buy house on my own, but now I have got double capacity, which means more people are chasing the same house, and the house prices will go up. That's a straight away phenomena. So there is a talk that the government should intervene in a market and keep the interest rates for owner occupiers low, but made the interest rates for investment purposes way too high so that the people can get in first.
Sure. Um, in theory, what you're suggesting does make sense, but the reality is that if something that like that was to happen, what it would do is it would shift demand to be stronger from owner occupiers. They would be able to afford more expensive properties because their borrowing capacity has gone up because interest rates are lower, and therefore that would increase demand side. If supply doesn't change, that should push prices higher. Um, but um, but simultaneous to that, there will be less investors out there in the market. So owner occupiers won't be competing with investor buyers, and that would make it easier for the owner occupier. But on the flip side, if there's less investors out there and investors right now are already negatively gearing their property, as we touched on earlier, or the majority of them are to to be in a position to provide housing supply, that would have quite significant impacts on the rental market if investors were forced to leave the market because it was less enticing to own investment properties, then the pool of rental properties out there would shrink. At the same time, you've got more owners coming in to try and buy properties, and that would push up demand. So the impact is somewhat difficult to see, but at a high level, it would appear that the impact would definitely be significantly worse for the rental market, and then on the owner occupier market, there is a case that it could push prices higher, but the impact of less investors would be a little bit ambiguous. But generally, it would certainly have a negative impact on the rental market. So I'm not too sure if that policy would be successful, ignoring the impact it would have on the rental market. It would certainly be more expensive rents because rents would have to be higher to encourage investors to offset that higher cost.
Right, right. So staying with the negative gearing and the benefits that we give out to the investors and builders and home occupiers and everyone, Australia has still lower dwellings per thousand people compared to OECD averages, which means there's a lot of people on waiting list for or experiencing homelessness. Why can't we build more houses? There is social support, there is government support, there's ample land. Why can't we build those houses? What's preventing it?
Sure. So I think your question is two-pronged. One is the affordability for lower demographic or lower income households. Um, that's an issue that's persistent across all economies. Yes, it's not desirable, but it is to some extent an issue across all economies, and something that's where governments can step in because those households don't essentially aren't competitive on the free market front. And then the second part of your question was on the construction side. I think what you're alluding to is the bottlenecks we've had in the construction sector over the last three-ish years since the pandemic, coming out of a very strong demand period where households had incentives to go out and buy new homes or build new homes at a time where supply was constrained because labourers where the pool of labourers were split between housing construction, but also the ongoing infrastructure projects that were under construction previously. As those construction projects feed through, that supply demand balance should normalize or revert back closer towards balance. We are seeing early signs of that. So if we're looking at completions in WA, we're back up to around 20,000 completions per year, which is quite significantly stronger than the 13 odd thousand we were seeing a few years ago. So that is ramping up. I think the other thing to remember is it takes a lot longer for housing construction to respond to demand than for demand to change. So, for example, population growth likely has already peaked, at least in Western Australia. We're starting to see slower rates of population growth come through now. But at the same time, we're seeing more approvals, and that should follow through to completions. And then if we're taking a look at the rental vacancy rate, which is a pretty good indicator of where the market's sitting, a little while ago we're sitting at a 0.7% vacancy rate. Now we're sitting at 2.7% vacancy, so it's moved up quite a fair bit. That's not to say that the rental pressures are no longer there, but certainly they're not there to the same extent they were previously. And some of the driving factors we're seeing is supply starting to respond at a time where demand is now adjusting back towards back to slightly lower levels. So in short, supply does respond. And then the other thing is markets are quite efficient, so higher prices do encourage more investment activity into the market. So generally the way housing market cycles work is with shifts in sentiment. So when prices are rising, people are attracted to the market in the hope of capital gains. At some point valuations do become stretched, and then that demand tails off and there's a shift in momentum. And then ultimately, when prices are falling, it's the reverse. So the prospect of capital losses do lead buyers to stay away or at least delay purchasing. But then on the flip side, at some point, the lower prices do draw more people back into the market. So at that point, first home buy owners might find it a little bit more easier to buy a home. Investors could be back attracted into the market, and trade up buyers could take that opportunity to upgrade to the home they've always wanted. So I suppose that's sort of the continuum we see in housing markets, and that continuum also applies to the new build sector, where when the demand is quite strong and owners or prospective buyers can't find what they're looking for in the established space, they might turn to the new build space. But as that supply goes on, that helps neutralize the market or bring it closer to equilibrium, and that is something that we're likely to see. So right now, last few years we've seen a very strong market driven by high demand, low supply. at some point demand will normalize and supply will go through. So there's a lot of properties that were under construction that were taking a long time to build through the pandemic. They will eventually finish. People who might be renting, younger demographics who bought a new home, they will eventually leave their rental property and move into these properties, free up one more stock in the established market, but ultimately help bring the market closer towards equilibrium. So yeah, it all comes down to market dynamics. If it makes sense to create an extra unit of supply, we've got abundant land, and when labor isn't construction labor isn't competing in the infrastructure build space and can better service the new home building space, that will happen, and the market will eventually normalize. At what point and when is I suppose somewhat unknown, but the market is very much driven by demand and supply, and we do have abundant land that if it makes economic sense to develop that land, at some point that land will be developed.
Um, okay, you touched upon the population in WA balancing out now. And that reminded me of Gert, a big conversation during the last elections on how much the immigration is affecting our housing market. What do you think? People said that side said immigration is affecting, the other said the immigrants don't straight away come into the housing market and are looking to buy. What's the actual reality?
So, so in terms of the actual reality, the housing market is purely based on demand and supply. At its simplest level, demand is quite simply the number of people that live in a particular place. The more people there are, the more that people need shelter over their heads, and that adds to housing demand. So yes, yes, we if we increase the population size, there is more housing demand. There's no question about it. But at the same time, Australia's got a very much a skills driven immigration policy. So a lot of the migrants do come in, add value to the economy, fill jobs that might not otherwise be filled by the locals, whether the locals don't have the skill set for it, or there's just not enough locals to fill those jobs. So from the demand point of view, yes, yes, migration does have a direct impact on the property market. Where that impact is, I suppose, phased or lagged, is migrants typically come in. They do tend to rent. Yes, some will go out and buy, but generally migrants will try and rent just so they can establish their footing, figure out where they want to live, and set up a bit of a base before they're comfortable enough making the decision to purchase. We've seen that in the previous data sets. So the previous boom we had in 2012 was when population growth peaked in 2012. But the housing market didn't peak till 2014 on the sales front, and that's because, or very likely, that migrants took a pause between when they initially arrived here, settled down, and then took the step to purchase their own property. And then if we take a look at how that flowed through to the construction side, so I think it was 2012 population growth peaked, 2013 it was a rental market that peaked, 2014 the sales market peaked, and then 2016 was when construction or building completions actually peaked. So you can see the lag between when demand initially lands or
Yeah.
it peaks in the economy to when that flows on to the established rental market, the established sales market, and then the new build market takes a little while to respond to that. So there is a lag. But the short answer to your question is yes, migration adds to population, which adds to demand. But there is a phase approach generally in terms of an initial impact on the rental market and then sales market to follow.
That is a very interesting observation because I came in 2014 and the housing market and the rentals were peaking everything. The prices were just so high when I came in. So, yes, I can relate to that thing very intimately. Uh, there's another discussion that goes on is that so many people or single older generation are living in palatial houses, but they can't downsize because of the stamp duty issue, and we should be working on the stamp duty front so that people can downsize and other people can move in, and that thing happens. Is that really a issue or is just conversational points?
Um, it definitely is an issue. So in a previous life, I was working at the Real Estate Institute of Western Australia, and some of the work we were doing there was to advocate for a more efficient industry. That was at a time where transaction volumes were quite low, and we were looking at ways to try and stimulate activity, and make more efficient use of housing stocks. As you touched on, some of the older demographics might be a single owner or a couple living in a 4x2 that they no longer need on, I don't know, 1,000 square meter lot or 700 square meter lot somewhere, and they're and for them it'd be more suitable to live in a lower maintenance, smaller property. But one of the reasons they're not able to do that is they would need to pay transfer duty on their new property. At the time, we did come up with a policy suggestion where there could be a potential transfer duty exemption, ultimately for that person to move out of their property into a smaller property, not having to pay transfer duty. Therefore, the government would forego transfer duty on that move. But on the flip side, that would well be offset by the fact that a younger family could move into that family-sized home, and when they purchase, they would pay transfer duty. So yes, it does appear that transfer duty is a restrictive factor for the older demographic to mobilize into a more optimal housing product for themselves. So yes, if there was some reform or change in that front, that should, in theory at least, make the market more efficient and free up some stock for who needs it or can better use it, better use that property.
Right. So that is an interesting conversation. One of the things that you alluded initially in very initial portions was that 70%, around 70% of Australians actually have their homes. Only 30% is which is in the rental market. There is this conversation that housing is a human right, or everyone should have their own houses. If that happens, there is no rental market. Everyone's living in their own houses. What does that thing leads to, that call for housing as a human right?
Um, Sure. So I suppose there's my response to that is two part. One is that housing markets are efficient. They work on demand and supply, and properties transact at prices where the buyer is willing to pay a price and the seller is willing to accept that price. So for that subsect of the market's working completely fine. And there's a willing buyer and a willing seller at a certain price, and that's where the market's at the moment. In terms of accessibility to housing, with an efficient market, there are people that might not be able to pay those prices or might not be willing to pay those prices even. But so with that, they might not enter the market. And that sort of leads me into my broader response to that question, in that I believe home ownership isn't a right for everybody. We particularly in Australia, we live in an economy where there's plenty of opportunities, and generally most people will eventually be able to purchase a property at some point if they do put in the effort. We have one of the higher wages in the country and plenty of opportunities for employment, particularly now. It just means that it takes a little while to save up a deposit and eventually get into the property. A lot of people want to go for the 4x2 with a nice pool and lovely grass as their first property, and they seem to benchmark that as unaffordable. But if you're a 25-year-old, that isn't the property you should be in a position to purchase at that point, straight away. Yes, if you are, you've worked hard and you're fortunate to get there. But if you continue to chip away, work hard, progress through your career, earn more, save deposits, you will eventually get to that property. But that 25-year-old should probably be looking at a smaller property, as a stepping stone that's more suitable for their current needs, and then later upgrade to the property they want. So when people say property is unaffordable, they're talking about their ultimate longer term property, where people don't want to go for that 2x1 units as a little stepping stone for 5 years, which they might be able to purchase while they're younger, but they'd rather save up, and wait a little bit longer to purchase the more desirable property as the market continues to chip away. And that's where I suppose some of the unaffordability comments come from. But ultimately, I don't believe housing is unaffordable for the mass of the Australian demographic. Eventually, people will be able to purchase a property. The other comment with that is, historically, people didn't study at university to the same extent people study today. People didn't go on gap years or take 6 months out in Europe as they tend to today. So ultimately, people are entering the labour force later, whereas historically, a few generations back, it might have been normal to have a few years experience under your belt at the age of 20 in a career and then continue to save up and buy a property at the age of 23, 24, 25, which some of the previous generations do say they did. Now people are finishing uni at those ages, going on gap years, etc. So they're adding a few years on, onto when they eventually start their professional careers. So that defers that time period. And then if you've got, say, a 30-year-old comparing themselves to a 20-year-old a few years ago, it's not a like for like comparison. So that might be one of the other elements that's impacting that affordability demographic. But if you're saying 10 years in a career starting today versus 10 years in a career many years ago, in 10 years, generally most people are in a position to purchase some type of property wherever they live. It might not be the typical or the grand 4x2 that you're looking for, but certainly can purchase that 2x1. And then back to your broader question of is housing a right for everybody? I don't believe home ownership is a right for everybody. I do believe access to shelter is, but whether that is through ownership or through the rental market, that's the ultimate right. But ultimately, everybody has different preferences or financial means where somebody might be in a position to purchase a property but choose to rent for a few years. So ultimately, it comes down to each individual whether they want to rent or own. But ownership doesn't necessarily have to be a right for everybody.
It's an interesting discussion because I've read through these views and articles on Facebook that my father could buy his house at when he was 20. Now I can't buy even at 30, but you already answered it. So that's you touched upon it. The other thing which I want to touch upon on the same area, I was having a podcast on another person on the transport and how we can bring in trams and other things into our transport mix. He said that the way we look at our Australian dream of ownership, home ownership, should be changed because we all look at four by two house, front yard, backyard. That's not for everyone. We need to have multi-storied buildings where single bed, one bedroom, one by one, two by one, three by two. Those apartments can be there, and those are good for some people. Some people go into rental, some people go into four by two, some people go into three by two. Different areas and different things. Can we achieve that, or will that be defeating the very purpose of that Australian dream of home ownership?
Um, I'm not necessarily sure that there is that Australian dream of having a 4x2. Yes, the majority of people do aspire to have that family home, but I think as the types of housing available across cities do evolve over time, do evolve, and more housing types are available, people will have the options of picking the option that most suits their wants for where they are in life. And it might be a younger person wants that apartment, and then as they mature and grow a family, it's a suburban home. And then as they age, perhaps a slightly lower maintenance, smaller property suits their needs. From a place like Perth, the spectrum of housing doesn't necessarily cater to that at the ground level. The majority of housing is a suburban house, and that's what people have got to choose from. But over time, as developments occur and property is developed to provide more options, and people have those options to choose from, people will naturally grow more comfortable to choosing what's more what's better for each person. For a place like Perth, housing has historically been a lot more affordable than other places, and people have been able to go straight into that suburban 4x2 property that you spoke of. But as price pressures do intensify as they have in other cities, and it becomes a financial constraint of what people are able to get into at various points in their life, that might encourage people to pick what's more suitable. But ultimately, that will mean that there's a more efficient use of housing stock out there as well. A single or a couple living in a 4x2 isn't the best use of that 4x2. It's probably generally more for a family, and then a unit or a smaller dwelling might be more efficient use for that younger couple.
That is interesting. Interesting. Um, Another question is that we discussed about the issues and solutions from an Australian context. Are there any lessons that Australia can learn from other countries, maybe OECD? maybe some other countries to solve our housing issue?
The short answer to that question is I don't know. So obviously I'm most familiar with the Australian, Western Australian, and Perth property markets.
Hmm.
I do have some knowledge of overseas markets, but I don't. I'm not fully aware of the context of what they're doing relative to what we're doing. Ultimately, I think our market is broadly efficient. There are obviously ways that it can always be more efficient. And then, as you touched on, transfer duty is a significant constraint for shifting between homes. That's definitely a clear area that could be addressed. But yeah, generally the market works, the free market works efficiently, and that is broadly what we do have, bar some intervention on the planning front and transfer front.
That's good. That's good. I think we have covered all of the issues that I've read through in the discussion, and I think many people can take away uh, some clarity on the narratives which is in the news or wherever we read through or get our news. So it should be able to help understand what we are discussing and what we read in the newspapers. So thank you for clarifying those things. Your insights are always very helpful.
So thanks for having me. Always happy to share my opinions and thoughts. I think there might be other opinions and thoughts where people might agree or disagree with certain things I've said. But yeah, those are my thoughts right now, and I was definitely happy to have this conversation and hope your listeners do find some value in what I said.
Wonderful. Thank you. Thank you, Dylan. Hope we chat soon on some other topic. And thank you for giving us this time.
So thanks, Nora.